In this week's episode of the Stockscores Market Minutes, we're going to look at why so many traders either are losing a lot of money during the crash or not making the kind of money that they should. Plus, I'll do my regular weekly market analysis, give you a sense of whether there is more crash ahead or not, and we will look at the day trade of the week on GNUS, and then at the very end, I'm going to do a market scan in search of opportunities that hopefully you can take advantage of in the weeks ahead. So why has the market crash hurt traders? Well, aside from the obvious thing, which is the big move down caused a lot of people to lock in losses or at least get out of their holdings at the worst possible time. That's a matter of fear. But since the crash, of course, we've had a great bounce back, and many traders and investors have missed out on the opportunity that the bounce back created. Now, if you've been watching my videos, hopefully you didn't miss out, because I've been telling you that the market bounce back was likely and it has been very profitable. There are other reasons, however, for traders to really miss out on opportunity. And the number one, I would say, is just paying way too much attention to headlines. If you look at the media on a regular basis, it all sounds like doom and gloom. And yet through that, the market has bounced back very, very effectively. And so one of the things that I learned a long time ago the hard way is to not listen to the news. The market does what it will do based on what people are doing with their money. And what you hear on CNN is really quite irrelevant to the stock market. The stock market looks forward. It does not look backward. And news is history. The market is looking to price in the future. Now, another common thing, and this really comes from some of the comments that get left on this channel, is people paying attention to things that really just don't matter, or at least in terms of how we make money in the market. One of the most common that I read in the comments is, oh, the market is artificially high because of the Fed. And that may be true. It may be that the Fed's injection of capital, and all central banks around the world who have been injecting capital into the economy, maybe that's the reason the stock market is up. But who cares? If you buy a stock and it goes up after you buy it, you make money. It doesn't matter why the stock went up. It doesn't matter if the Fed is propping up the stock market. If the stock market is higher than before, then you should be making money by owning stocks. So don't worry about these trivial matters of why the stock market is up. It only matters if you're managing billions of dollars and you can't get out of the market quickly when the market starts to roll over. But most of you watching are managing your own money. You're not managing hundreds of millions or billions of dollars. And likely you can exit the market in a day if you really wanted to. You just sell everything you own when there's a breakdown. Now, we haven't had the breakdown yet, and we'll watch for that, and I'll keep you updated here, but really don't get caught up in the idea of focusing on things that don't matter to the market. Another thing that happens a lot is investors fight the trend. The trend since, toward the end of March has, for the most part, been up. And yet you have countless people saying, well, it doesn't make sense. The market shouldn't be this high. We have COVID around the world, all of very valid reasons, and yet the market continues to go up. Do not argue with the market. If the market is going up, be a buyer. If the market is going down, be a seller. And that really comes to my next point, which is keep it simple. It really is simple. Trading is simple, but it is not easy because we let our emotions get in the way. Our own biases get injected into our decision making. And if we just kept it simple and watched the charts and watched how money is flowing, it's really quite easy. Now, the final thing I'll say is that we want to focus on alpha stocks. I talk about alpha stocks a lot on the channel here, but they are those stocks that are trading on their own story. The stocks that are trading with very abnormal volume, that have great liquidity, you can move in and out of them quickly, and they are really the hot stocks. These hot stocks will move regardless of what the market is doing because they are trading on their own story. If a pharmaceutical company has a new vaccine for COVID, it's going to go up no matter how much the market goes down. And if you learn how to find alpha stocks, if you go to stockscores.com and look at some of the videos I've made or take some of the courses I've created, you will learn how to find those alpha stocks. And if you can focus on those, then what the overall market does matters a whole lot less. All right, let's get into this week's market analysis, starting off with the US markets, as we always do. And we're going to start with the S&P 500. Now, last week, I made some real cautionary remarks about the S&P 500 because we were threatening the upward trend line of support. And I told you all here on the channel last week that we want to watch for a breakdown through critical support. So let's revisit that chart now and just see what happened. So what I was advising everyone watch for is a breakdown through this level, because that was sort of the line in the sand. We had falling tops, which is pessimistic, and if we were to break down through that price level, I felt like we needed to get pretty defensive. Now, one of the reasons I tell you what to watch for next week as opposed to what to do now is because the market's always evolving. You need to be armed with the tools, the knowledge, the techniques to figure out what to do next. And so, it doesn't do anyone any good to say you should have been a buyer last week. No, you should know what to look for. And so last week we were looking for that breakdown through that support level, and it never happened. If it had happened, I would be an aggressive seller of stocks, but it didn't happen. And therefore we remain in a bullish short-term market, at least the last week. Now, we are hitting some resistance here. You can see this sort of ceiling price. We've rallied for 4 days. We hit that resistance. The next thing that I think will happen is we may see a pullback next week because we made a pretty good run. And then at the end of the week on Thursday, of course, Friday is a market holiday for the July 4th long weekend, we broke down of this upward trend from a falling top. So I do think that we may start next week with a little bit of weakness, and I caution for that. But that's still pretty short-term oriented. It's not really the sort of breakdown that applies to a longer-term investor, but more for a day or swing trader. So be a little bit cautious going into early next week because we did have a little bit of a breakdown as we hit some resistance. Now, looking at the longer-term chart, the weekly chart, which I like to use for that longer-term investor, we are still in the upward trend. We were flirting with breaking that trend last week. We bounced back, so we're still okay. I don't like that this falling top has formed. That makes me still want to be fairly cautious. But until the upward trend is broken, until we break down through that, call it 298 level on the SPY, I think you can remain on the buy side of the market. Now, moving along to the small cap stocks in the US, you can see the upward trend line was broken. We talked about that last week. But we never really had the next wave of the breakdown, which would be a move through that support price. And so until that happens, until we break down through roughly 134 on the IWM, I wouldn't get too pessimistic. Looking at the Canadian markets, you can see that the Canadian market also made a comeback. Now, there's a big gap there. Part of the reason for that is the Canadian markets were closed for the July 1st holiday on Wednesday. On July 1st, the US markets moved up, so the Canadian markets had a little catching up to do. The rising bottoms are still in place. We're in a very crowded sideways trading range, which makes trading a little more difficult. And therefore, that is that reason you want to focus on those alpha stocks, those stocks that are trading on their own story. They're characterized by abnormal volume, trading a lot more volume than they would normally trade and breaking out from low volatility, kind of boring sideways trading patterns. We're going to look at the day trade of the week in just a moment, and I'll show you an example of what I mean by an alpha stock. Now let's take a look at the TSX venture market. Actually, first we'll look at the long-term chart of the TSX, much like the S&P 500, until that upward trend line gets broken and until we start moving down below 2250 on the XIU, I remain bullish or at least neutral on the Canadian market. All right, now looking at the TSX Venture, really benefiting from the strength in the gold market. Of course, we do have the Federal Reserve and all of the central banks stimulating the economy with the injection of capital into the economy, and that causes gold to go up. and we've seen that for a number of months. We've been on the bullish side for gold for quite some time. We broke out on the gold chart 2 weeks ago, and that has led to some nice gains in those gold stocks. We talked a little bit about that last week, and I still think you can be long of gold stocks. The trend is up. We'll talk about gold more in just a moment, but the TSX Venture, which is the chart that we're looking at now, it has lots of gold stocks in that market, and so that's why this exchange is doing well. All right, moving along to commodities, and there we see the chart of gold. You can see the upward trend line, the breakout that we had a couple of weeks ago, and the trend is still up. I think you have to be a little bit careful about chasing gold stocks higher. Make sure you're buying good chart patterns, not chasing parabolic trends to the upside, because that gets a little risky, but in general, you want to be a holder of the gold stocks that you own. Oil is sort of grinding its way higher on quite light volume. I wouldn't consider it a really good chart. It's more a chart that isn't bad or isn't as bad as it was. We have broken some downward trend lines. We're building some rising bottoms, but the volume is light. There's not a lot of excitement. And so the the oil stocks still kind of lagging. There's some stability there, but it's not really a market where people are rushing to own them. And I think you want to be pretty selective about the oil stocks. All right, moving along onto the fear chart. And we always like to take a look at the VXX to get a gauge of where fear is at. And you can see that it is elevated, but we are not moving up sharply. We're not building rising bottoms. And so I would say fear, while elevated, is not rising. There is no panic. So let's get our summary of my ratings then. I remain neutral on both time frames for US and Canadian stocks. Bullish in the short term and bullish in the long term for gold, and oil neutral long term and bullish short term. The buyers really did a great job of defending that daily upward trend line that we talked about last week, and they're back in control of the market. Now, remain bullish, but do remain cautious because there is that potential to break that upward trend line. So watch for that. We want to focus on the alpha stocks because those are the ones that are doing best. You know, the last 3 weeks we've had kind of a sideways, choppy market. And in order to maximize trading performance right now, you have to be really fussy and focus on those hot stocks. There's a few of them every day. I'm going to show you one in just a moment. Gold continues to cruise higher, and it is providing good trading opportunities. Oil is stable, but it's not that exciting. And as I said, fear is still elevated, but we do not have a panic. All right, so let's get into the day trade of the week. This is just an example of a stock that we traded in my active live service, which is something offered by Stockscores. You can learn more about that at stockscores.com. During active live, I highlight some stocks early in the day that I think have good potential, and the day trade of the week, GNUS, was one of those. Here you see the chart. You can see what we call the action candle, which is an indicator that I've developed, the little pink dot there, breaking from low volatility. And notice the real strong volume to start the day. Now this is a 2-minute chart, so each one of the bars on this screen represents 2 minutes, and for the most part you're seeing 1 day of trading. So the entry signal was there at 9:34 in the morning Eastern time on Thursday, and the stock then pulled back. Now one of the things that we look for when the market pulls back like that is a confirming second signal, and that means if the market pulls back, we wait for the stock to move back up through its entry signal price. And that happened about 10 minutes later. So you had lots of time to enter this trade. And in fact, the stock really didn't go anywhere for a couple of hours. It wasn't until 11:30 that the stock really started going. However, what was consistent all morning was that the volume was higher than normal. And that is why we were focused on this stock. It was an alpha stock. The most important footprint of alpha is abnormal volume. And if you have that abnormal volume trading, you know that there is a crowd gathered in that stock. And then it's just a matter of waiting for the predictive chart pattern to trigger to tell you that it is time to buy. And again, those are things that I teach in the Stockscores Active Trader course. All right, so this stock went up really nicely, as you can see. The position size for $100 of risk was 1,420 shares. That required about $3,749 of capital. You could not margin this stock, so you had to tie up $3,750 worth of capital. It went up nicely. It went as high as 18 RR, but it closed the day at 12.7, which means a reward for risk gain of $1,270, a 34% return on a one-day hold, and that is a great trade. All right, let's move along and see if we can find some longer-term trading opportunities. And to do this, I like to look at the Stockscores Market Scan tool. So we'll jump over to that now. And we're going to run a scan called the Abnormal Day Up Scan. Now, this is a tool available to members of Stockscores, either investor or active trader members. We're going to click on Abnormal Breaks US, which is an investor scan. I do this scan every day. It's how I find those longer term trades where we're going to hold for weeks or months. And let's take a look through some of these charts and see if there's any of these stocks that are breaking from low volatility with abnormal activity. And so the key thing here is we want to see those breaks from predictive chart patterns with good volume coming into them. So the first one that I notice is AIRI on screen there, and you can see that the stock has rising bottoms. That's a sign of optimism. It's breaking through this resistance level, and the volume has been increasing, and that's why those Stockscores indicators are starting to pick up. So this looks pretty good. I would give it a 6.5 out of 10, which means I think it has a 65% chance of working. Now you'll notice I sort of zoom past some of these. The stocks that I'm ripping past are ones that have some problem in their chart. All of those things I can teach, but I'm not going to go into the detail today. VUZI is breaking from what's called a pennant pattern. A little bit of spike in volume. We had a little spike here back in early May. Stock went sideways. It looks like it may be coming alive again. Decent gains. You may see it stall here at $3 because that's the peak highs from a couple of, well, maybe a month ago. But looks pretty good. I'd give that a 6.5 out of 10 as well. Continuing along, we'll look through as many as we can, as quickly as we can. ELTK catches my interest because of the big volume on Thursday and the big price move on Thursday. So that tells me that investors are excited about something. I like to look at the 3-year chart as well. And when I look at the 3-year chart of this stock, I see that there's an issue, and that is this resistance from past highs. And I think that's going to limit the upside. Now, you could argue that this is a pennant break, and it is, in fact, a pennant break. I say, again, a pretty good chart, not a great chart. I would give it a 6 out of 10. Moving along, let's look at our next page. This is a great tool because we can just scan through so many stocks. The computer does most of the work, and it puts those stocks in front of us that we're trading abnormally, which is the key sort of characteristic of hot stocks. I'm just going to keep hammering through, looking for something good. My final step in the process is to take a look at the chart pattern to see if I like it. BLFS has a pretty good chart pattern on the daily, but I'm concerned about resistance at $20, so I think I'm going to pass on that one. Continuing along, we're almost done. We had to look at 31 stocks. We went from, say, 7,000 US listed stocks down to 31 that have good potential. And then we look at the chart of those 31 to see if they have the right kind of chart pattern. I like GNUS, NUS, decent long-term setup. I'll tell you why. Here is the downward trend line. Well, maybe my drawing tool isn't going to work for me. It's not. But you could imagine a downward trend line across these tops, the build of a rising bottom, and then the break of a rising bottom. If you're willing to stick with the trade for a few months, I think this is one worth considering as long as it doesn't go down through this floor price. It looks like about $37 perhaps. I like this. I think this is a good long-term setup on NUS. We're just about done. I think we got maybe one more page to go, one stock to go, and I don't particularly like that. Yeah, I think we'll call it a end to the scan there because I don't really see anything else I like. Well, that has been the Stockscores Market Minutes for July 6th. Hope that you are enjoying the long weekend, and I hope that you enjoyed this video. And if you did, please click on the subscribe button, click on the like button, the big thumbs up there. Make sure you click on the notifications bell. Most importantly, trade well.